Hi, everyone, and thank you for joining us for today's webcast, Uranium, a key element for a net zero carbon future, sponsored by Sprott Asset Management. Today's webcast will be providing 1 CFP, 1 SEMA, and 1 CFA CE credits. If you have any questions on credit, please don't hesitate to give us a call at 704-540-2657. We welcome any questions you may have at any point in time during today's webcast. You can type your questions in the Q&A box to the right of the slides, and we'll do our best to get to as many of your questions as possible. In the event your question is not answered during today's event, a member of the Sprott Asset Management team will get back to you directly. We have made materials available for you to download in the Documents folder at the bottom of your screen. And as always, we appreciate your feedback and are striving to make these events the best they can be for your viewing satisfaction. At your convenience, please take a moment to take our survey that is also located at the bottom of your console. We will cover quite a bit of information during today's webcast. If at any point in time you're interested in scheduling a one-on-one meeting with Sprott Asset Management, please click the one-on-one folder at the bottom of your screen and confirm the request. And in the event you missed any part of today's webcast or simply would like to watch it again, a replay will be made available and all registrants will receive that information by email. So with that, I'd like to go ahead and turn it over to today's first speaker, Ed Coyne, Senior Managing Director, Global Sales for Sprott Asset Management. So Ed, take it away.
Thank you, Natalie, and thank you all for joining us today. I think you're going to find that today's webcast is going to be unique and informative. Again, my name is Ed Coyne, Senior Managing Director at Sprott Inc., and with me today are two special guests. First, we have Per Gendir from WMC Energy. Per joined WMC Energy with a broad background in the energy sector spanning more than 20 years. Per has worked in the nuclear power plant fleet management, investment planning, and new build programs at utilities in Sweden and Switzerland. At WMC, Per focuses on business development, commercial engagement, and serves as Sprott's technical advisor for all things uranium as relates to our Sprott Physical Uranium Trust. Also with me today is John Ciampaglia. John joins us today with more than 25 years of investment industry experience and serves as the Chief Executive Officer of Sprott Asset Management and is a Senior Managing Director at Sprott Inc. John earned his Bachelor of Science in Economics from York University and is a CFA charter holder. On today's webcast, I want to focus really on several key points. And we're going to start with Per and talk about the case for uranium and the market outlook. I'll also ask Per to cover some key catalysts for growth in nuclear energy, as well as divide fact from fiction on the safety of nuclear energy. Then we'll turn our attention to John Ciampaglia, who will take a look at what a net carbon future might look like, as well as outline some of the key benefits and differentiators of the Sprott Physical Uranium Trust. And then finally, before we move to the Q&A session, which I'm happy to say is many questions that have already come in, I will highlight a few talking points on how to think about not just real assets in general and precious metals, but more specifically, how uranium can work as a diversifier within your portfolio. Now, before we turn to the bulk of the presentation, for those that are not familiar with Sprott, I want to give you a quick highlight of who we are. Sprott is a global leader in precious metals and real asset investments. With over $18 billion in assets and over 4 decades of experience, we're really the leader in the precious metals real asset market. We're a publicly traded company, and we trade both on the New York Stock Exchange and the Toronto Stock Exchange under the ticker symbol SII. At Sprott, we offer a full suite of solutions. Whether you're looking to allocate to the physical market through one of our physical bullion trusts, whether that's gold, silver, platinum, and palladium, and most recently, the uranium, as well as our managed equities, whether it's a actively managed mutual fund or a factor-based ETF or separate managed accounts. In addition, we offer lending as well as brokerage services, all focused on the real asset precious metals market. And for today's particular webcast, I want to focus our attention on the Sprott Physical Uranium Trust. And on page 5, I just included a few highlights on what makes this trust unique. First and foremost, it's new. It's launched back in July of this year of 2021. It's the largest and the only physical uranium fund currently in the marketplace. And like all of our trusts, it provides a secure, convenient, exchange-traded investment alternative for investors who want to own physical uranium, or in other cases, gold, silver, platinum, and palladium. And Sprott, the firm, serves as a trust manager and is backed by more than 4 decades worth of physical commodity investment experience. So with that, I'd like to now turn our attention to the webcast and go on about what we want to talk about today, which is uranium. And I've asked Per to really start us off from WMC Energy to talk about the investment case for uranium. Per, thank you for joining us today.
Yeah, thanks very much, Ed. Thanks for having me. I'm quite excited to talk about this here today. So just outlining a little bit what I'm going to talk about is, first of all, I think any discussion on uranium market, you're going to have to talk about nuclear energy as well. So I'll talk a little bit about what makes it unique, what's driving the renewed interest in it. And I think that what's going to become obvious here in the coming few years is that it is a crucial technology and it needs to play an important role in if the society is serious about decarbonization. I'll also touch a little bit on the uranium market, recent price developments, what products are out there, and a little bit about the traditional market and also how it's been changing recently with some non-utility buyers coming in and causing quite a bit of a stir here over the last year or so. Looking a little further, there is obviously quite a lot of mines that have been idled recently because there's been a period of low prices for a little bit. And finally, also add to that the recent policy changes across the globe, and all these factors combined, they make it for a very interesting time for uranium in general. So, looking at nuclear energy in general, like what makes it unique, and I think one main factor that stands out is the capacity factor that we talk about. It essentially means how much energy do you get out of a power station? Like how much of the time is it operating? Like obviously they have intermittent sources as wind power and solar power that are subject to the environment when they can actually operate, and then you have more power stations with an on button. Basically, uranium powers nuclear energy. That tends to be on all the time because it's obviously a big upfront investment, and once it's running, you just keep it on. And then add to that, you have fossil fuels power stations as well, which also can have a high capacity factor, but most of the time the operating the cost of operating it is a little too expensive. So whatever your fuel cost might be driving your behavior to not operate it all the time. But looking at nuclear energy with an extremely high capacity factor, it creates a backbone in most electricity systems in countries where they are present.
And Per, I think that's a great point to talk about. I'm sorry to interrupt you, but I do think that's a good point to talk about because so often people think about alternative energies just for what it costs to use, but few people actually talk about what it costs to produce. And I think that's an important point to highlight. And to your point there, the capacity factor is a really important talking point in talking about nuclear in general relative to some other clean energy options that are out there.
Oh, absolutely. I mean, it's a base load technology, which means that it's going to be on there all the time, 24/7. And with an extremely low operating cost from a fuel perspective, it's quite insensitive to price changes. Once you have the nuclear power station built, it's going to be there and it's going to deliver energy for the lifetime of it. So it's a very good complement to other renewable energy sources that might not be as reliable, but certainly interesting from a low carbon perspective.
And to your next point here, the efficiency factor is incredible. Walk us through this slide on page 9. I think this is a great kind of visual on how efficient our nuclear truly is.
Yeah, I mean, it's quite mind-boggling. You're absolutely right, Ed. That it's obviously it uses a different kind of energy. So when you compare nuclear energy to chemical energy that other fossil fuels are using, I mean, it's orders of magnitude difference. So it's the concept is still quite similar. I mean, it's like you split atoms to create friction energy from fission products. You harness that energy to boil water. So I mean, even though it's a very serious technology, or a very advanced technology, it's still just a fancy tea kettle, if you will. And then you use the water to drive a turbine. So from that, but whatever happens after the nuclear reaction is quite straightforward. But what is the fascinating part and what sets it apart from anything else is obviously what happens inside the reactor. And I mean, this graphic here is pretty good comparison to, you have a fuel pellet, which is the size of a gummy bear, essentially. It contains a lot more energy. You're just not harnessing all of it, but you get the same amount of energy as compared to, 3 barrels of oil, a ton of coal, or 17,000 cubic feet of natural gas. So you get the same amount of energy output based on those inputs, which is really quite astounding. Moving on to the cleanliness, and this is across the life cycle, so it's just not, obviously, you have absolutely zero emissions from the nuclear reaction itself and the nuclear power station itself, but this is taking the entire fuel chain from mining, conversion, enrichment, and to decommissioning of a power station. This is taking everything into account, and I mean, and the numbers, I think, speak for themselves. I mean, you can see that it really stands apart. I mean, you have nuclear, wind, and solar on the same level, more or less, and then it's just, yeah, fossil fuels. No, of course, there's no surprise that they're going to have high emissions, but I think this graphic really drives home the point that in any scenario where you're going to take greenhouse gas emissions seriously, this is the case for nuclear. It's quite clear to me. And finally, let's talk a little bit about safety as well. And everybody, when you talk about nuclear energy, clearly everybody's going to think about, there's 3 Mile Island, there's Chernobyl, there's Fukushima, and these are all, I mean, of course, very large events that have a big impact on people's lives. But what I think people don't necessarily consider is that 2 of them, there were no deaths at all attributed to the nuclear aspect of things. I mean, 3 Mile Island, the barriers themselves out of the power station actually held up just fine. So from a safety perspective, the design worked the way it was supposed to be in the case of a meltdown. So there was very little, if any, radiation released into the environment. Fukushima, there you had 20,000 people died from the tsunami. There was not a single death from radiation. But what you can think about, there was a handful of deaths driven by the evacuation based on the fear of potential impacts of it. So that was moving people from hospitals, old and frail. There was a lot of stress cost. All of those results have not been come out yet, but clearly there is definitely indication that the fear itself led to more suffering than the radiation releases themselves. Of course, what's left is Chernobyl, which is, and looking at the numbers on the left here, that's when you look at fatality rates or mortality caused by different energy aspects. Those numbers on the nuclear side, that's from Chernobyl alone. But it was from the fire, and basically the firefighters that fought the fire of an exploding reactor. They were the ones who died at it, and it was a lot less than 100. It was maybe around 70 people in total, which is, of course, a lot less than was touted at the time of it. And now, when almost 40 years have passed, I think it's quite clear that it's nowhere near those numbers that people said initially were going to happen as the amount of death that were going to be caused by this. So, again, you compare it to other forms of electricity production technologies. The numbers speak for themselves. I mean, it really is as safe as you can get. I mean, producing electricity is going to be dangerous. Mining is going to be dangerous. All sorts of activities are going to be dangerous. But when lining them up next to each other, it definitely scores very, very well. And then switching to the other technology.
Per, I was just going to say,
yeah,
clearly also in the last 40 years, we've certainly advanced in technology and procedures, and we've learned from all these cases as well of what to do and not do. So it's not even taking into account the fact that this has become a very mature marketplace, and what we know today versus what we knew, say, 30 or 40 years ago is very different in the way to conduct ourselves and handle these situations. Is that fair to say?
Oh, absolutely. I mean, nuclear safety, it develops every year. There's lessons learned. There's so much information shared between utilities and nuclear operators around the world. great global associations, WANO, World Association of Nuclear Operators, for example. They don't in the limelight much because people don't really see them, but it's completely open books where nuclear power stations share what incidents have happened, what did we do to address it, what lessons can be learned from it. It really is quite astounding. There is no competition between different utilities there. It's completely open books, and they even send teams from various parts of the world to visit others and let them have a look at how things are run at a certain station and open for suggestions how to improve themselves. And this is by the industry, for the industry. Then, of course, you have the nuclear regulator whose job is to make sure that safety standards are upheld. And this is all coordinated by IAEA in Vienna. But then you have their association of a bunch of national regulators who all fall under the umbrella there. And it is several levels, and I used to work in that field a little bit, and it really is impressive how nuclear operators across the world come together and it continuously improve how they operate and their code of conduct. So it's really, you need to be there to see it, but I would encourage anyone who would like to visit a power station to do so, and you really get a first-hand look at how seriously they all take the safety in their operations. I wasn't sure about nuclear energy myself, what to think about it, but then I decided to join the field to basically find it out when I was at a rotational program at the utility in Sweden, and I was completely blown away how professional they were and how open they were about any issues that they may have and how they address them. So it definitely built up my confidence, and I would surely encourage anyone else to just start looking into it. There's a lot of things available online, but it's also, if you have the opportunity to visit a power station, I would highly encourage anyone to do so.
Well, and let's shift gears now from to the investment standpoint and what we're seeing in the market today, but also let's address the last couple of decades, because this is something we have seen before. There has been fits and starts in this market. Can you talk a bit about what we perceive as a potential new bull market that may be emerging or has already emerged within uranium? Walk us through this chart a little bit and help the viewers and listeners understand what we're seeing right now in the market today.
Sure, absolutely. I mean, I won't spend too much time talking about the 60s and 70s, but obviously that's when most nuclear power stations were built. The technology started to emerge, and you obviously had a dramatic increase in demand already at that time. Then you had the 3 Mile Island, you had Chernobyl, that sort of created a little bit of a downturn, and a lot of new build projects were paused, and then it was a lull for almost 20 years, if you will. And then early 2000s, then not too dissimilar from now, there was heightened awareness of potential climate challenges that increases in greenhouse emissions. Something needs to be done to this, and it was sort of what's called most people referred to at the time as the renaissance for nuclear energy. A lot of new build projects were announced, and at the same time, you combine this with some incidents at mines, very large mines, flooding in Canada, and there was some other natural disasters in Australia that had large supply sources fall out for a while. And adding to that, investor interest, it's all like, oh, there's a good story here. And again, it's like uranium is going to have a role to play, or nuclear energy is going to have a role to play, so let's invest in uranium. And these factors combined led to this spike around 2007. Of course, it didn't last very long because you had a global financial crisis that made just financing too expensive. So a lot of projects were shelved. You add the Fukushima disaster, and there was basically led up to a 10-year hiatus, if you will, or a bit of a bear market. Then a few years ago, that's when producers, some large international producers, basically like we can't operate our mines at these costs, certainly not at full capacity. So they started idling capacity. And of course, I mean, and basically just they still had contracts in place, so they just bought material in the spot market, fed into those contracts, and that started to tighten the oversupply. And basically from 2019 onwards, we've seen a slow but steady increase in uranium prices, and that certainly has been starting to accelerate now this year, as well as we're going to talk about here in a little bit.
Yeah, let's shift to page 13, because I think this chart really highlights exactly that acceleration that we're seeing in the market today.
Absolutely. I mean, you see utilities have their contracting cycles when they contract with primary suppliers for, and the delivery windows there can be 3 up to 10 years sometimes, and they have their cycles, and obviously they try to time it well, and they do a very good job at it, and when they want to procure uranium and sort of the different styles of contracting, if it's going to be, have floors and ceilings and protections in there. But some utilities come to the spot market for material as well. It's definitely, it varies by utility to utility, but there is a spot market for uranium, but it's just not for utilities and suppliers. There are traders in there too, and it's a fairly liquid market. I mean, not compared to huge commodities like oil or gas, obviously, but it's come a long way from the early 2000s. And there's definitely, there's supply and demand drives everything. And when you see a good investment case, you have people who are interested in investing, and they then put some money into it. And it definitely has been, and already in 2007, when investors came in as an early indicator of potential, not necessarily price spike, but an increase in price anyway. And we haven't seen that for about 10, 12 years. And now this year, quite dramatic shift where in funds are investing. There's yellow cake. There's certainly spots, as everybody's aware. But even junior miners have started buying a little bit as well. And you're starting to see the impact on uranium price as well. It's up 30% in a month's time, essentially. So it certainly has a large impact.
Yeah, and on page 14, I think we highlight that nicely also, that the sentiment has continued to turn positive within the space. Talk a bit about that as well. I mean, you're in the market pretty much every day talking to the investors. I think you've mentioned this to me in the past, that it's a relatively small universe or small circle of investors and traders at the institutional side. Can you give us some additional color on that sentiment you're seeing? What are you hearing kind of day in, day out in your activity of the marketplace today and the appetite?
Oh, absolutely. I mean, there is certainly investors who are both in the physical uranium space as well as the uranium equity space, and it's because I think the physical uranium space is coming more accessible, not only because of spot, of course, but even there are other funds who are opening their own accounts and buying a little bit of uranium to sit on physically. And of course, there are holding costs and there are other things to consider around it, but if there's a will, there's a way, and certainly some people are interested in it, and otherwise there's spot as an option, but clearly some banks are holding material on behalf of others. They've been starting their own funds as well, so it's definitely spilling over, and I think it's quite unprecedented, the interest in physical uranium for the time being.
And let's talk about the supply-demand side, because like all commodities, it tends to be a supply-demand equation. What's going on in uranium right now in that imbalance? Talk us through that a little bit.
Yeah, absolutely. It's I would say a normal year before these idled mines and sort of reduced production, maybe it's 150 million pounds a year. Now we're looking at about 125, a little bit more than that. So there's obviously a pretty significant difference. So that gap you see between the supply and demand there, that tends to be filled by what's called secondary supplies, and that can be government stockpiles. It could be underfeeding from enrichers. I mean, we're getting into too much complications there. It's basically an enrichment facility can use idle or non-used capacity to basically free up uranium to sell in the market. It turns into a uranium mine, if you will, and that's because the enrichment market has been very quiet since Fukushima in general. Enrichers have been able to supply quite a bit of uranium to the market. Now, enrichment prices are going back up and their capacity is committed. So that's starting to dwindle pretty fast. And another aspect or another source in secondary supply is commercial inventories as well. And they are certainly starting to open up now with this dramatic increase over the last month. You clearly see that their parties have not necessarily been interested in selling before. Well, now you're hitting new threshold and they might actually change their behavior a little bit. But the secondary supplies, it is a finite source of material. So with the reductions in production from some of the larger mines, you're obviously going to burn through these secondary supplies a lot quicker, and you're going to tighten the supply, and it's going to come from somewhere. So the landscape is definitely changing. And we haven't talked too much about the. Sorry, go ahead, Ed.
I was just saying, clearly demand is spiking. I mean, I'm just looking around my office right now, the amount of energy I'm consuming between my laptops and TVs and printers. I'm just one person, and as the population continues to grow, we do a nice job of talking about the demand side of energy over the next couple of decades. That relative to the imbalance, I gotta believe that's a what you said earlier about a bull phase of the market. That's certainly percolating, if not direct, certainly under the surface.
Oh no, absolutely. And I mean, I think on a fundamental level, I mean, access to electricity is very crucial to quality of life in general, and the developing world is certainly being electrified right now. But even in the development side of the world, just like you said, I mean, humanity is pretty creative. They tend to find things to spend electricity on, whether it's a flat screen in your bathroom or you're going to do crypto mining, but maybe not the most crucial thing. But I think a real game changer is the electrification of the transport sector. So that we can see a very dramatic increase in the need for electricity. And I think this picture only shows a portion of it. I think it's going to be revised upwards in the years to come. So it's just, the need for electricity is going to be there, and it's only going to grow. And then starting to round up here a little bit, obviously, there is a lot of things happening. The decarbonization issue is getting real. There is a global momentum that I have not seen before. I used to work in policy a little bit for a few years, about 15 years ago, and there was nowhere near the momentum that you're seeing now, where actual policies are being put in place all across the world. And some of those goals are extremely ambitious. So it remains to be seen. Obviously, it's going to happen, but something that definitely gives credibility and I think relief to at least U.S. utilities is the recent news in Illinois, where there's some reactors were on the verge of being shut down because legislation couldn't get passed to save them. When you see confidence from a national policy level, but it actually translates into concrete action that saves a couple of reactors, I think then it's not just a dream anymore. It's actually starting to happen. So I think that builds confidence, and I think we're seeing it all across the globe as well. That it's more real than it's ever been before. So it's quite exciting. And then finally,
I was going to say, to your point, from a global standpoint, I think this is a great chart, just our page, because it shows exactly what's happening, not just here in the States, but really globally. Talk a bit about this, because I think this is a great piece for people to sort of think about what the next couple of decades are going to look like.
Yeah, no, absolutely. I mean, it's most of the time, you tend to look out the windows and see how things change, and so you're a little focusing on your immediate surroundings, but and even though, I mean, I'm in Europe, and it wasn't the most fun time to be in nuclear energy following Fukushima, for sure. Germany is exiting, and there's bad news everywhere. But something that's never shot is China. China has just been, it's basically announced 2005, we're going to be serious about nuclear energy, and they have not stopped since. It's new reactors coming out, like announcements every year, and they are just moving along. And even Japan, obviously, who severely impacted by Fukushima, well, they are now coming around and saying that, yeah, we're going to get as many reactors as we can back online, and that's obviously a huge sign of confidence from that part of the world. And even here on this side of the Atlantic as well, it's with the national policy in the United States, and now bipartisan more or less, that is the support for nuclear energy is going to be there regardless of who's sitting in the White House, is a huge boost of confidence. So I think to wrap up, like, I mean, we're going to need all low carbon technologies, regardless of what they are, in order to get to sort of a net zero carbon society, like it's simply not feasible without nuclear energy, and it's not just the current level. It's going to be a substantial expansion needed for us to be serious about this. So if you share this belief, I think in general uranium is a very good investment for the time being. So yeah, that's it for now, Ed. So yeah, thank you very much.
Yeah, thank you for shedding some light on it and giving us a technical look at the uranium trade. I always like to think that uranium or nuclear in general is really the foundation for a net carbon future going forward, and simply the backup generator for things like wind and solar. So clearly I agree. Clearly we're selling our own book, so to speak, but no question about it. You know, we're going carbon neutral, or we're attempting to, and nuclear is going to serve a role there. And also for those that are listening, you know, Per will be available for Q&A. We've got up to 45 questions currently that have come in, so he'll be available towards the end of this call to answer any specific questions you might have. What I'd like to do now is really shift gears a bit and bring on John Chapaglia, who John and I have worked together for over 5.5 years now, close to 6 years, and he's done a wonderful job both in not only product development or creation, but really helping people understand how these products work and what they do and why they do it. But more importantly than that, I want to have John talk a little bit about what the net carbon future might look like and uranium's role in it, and also, more importantly, how our product can help you get exposure to that space. So with that, John, thank you for joining us, and tell us a little bit about the net carbon future, you know, zero carbon future. What is that going to look like, and how can we maybe take part in that?
Yeah, thanks, Ed, for the introduction, and thank you to all of our listeners today. We're very excited about this topic today, and maybe we're a bit too geeky about this kind of stuff, but we do think it's a very interesting and quickly evolving investment category that is gaining traction around the world. And I think it's happening for a couple of key reasons. One, the growing realization by not just governments, but all of us as we've seen more and more extreme weather events around the globe, that greenhouse gas emissions need to be reduced and managed. And government policy, as Per has mentioned, has really swung hard to address this. And there is growing political pressure to make real change, and these changes take years, if not decades, to implement. So it's not an overnight solution, but if you don't make these changes now, we'll have more extreme consequences in the future. So this whole idea about net zero carbon is a growing theme where governments and even individuals are trying to think about how much carbon they produce and how to offset that. So in the case of energy production, which is a huge source of greenhouse gas emissions, the world is clearly trying to figure out how to transition away from intensive greenhouse gas intensive fossil fuels and move them to more friendly forms of energy production. And we all know that solar and renewables and hydroelectric are going to receive continued investment and infrastructure build out as they're all very greenhouse gas friendly, as we showed you before. The big challenge there is they don't provide reliable baseload energy production. Obviously at nighttime, solar is out. When the wind is not blowing, turbines are not spinning. And I'll just point out a couple recent examples. I just read an article this week that in the United Kingdom, wind speeds have been lower on average this year, and as a result, their energy production from their turbine fleet is down, and they've had to switch to natural gas. So yes, natural gas is a much better cleaning form of energy than, say, coal or oil, but it is still much, much higher. Another example would be, closer to home in Texas last February when they experienced that very severe winter storm. The freezing temperatures that they were not accustomed to completely crippled their electrical network. Wind turbines froze, natural gas wells froze at a time when demand for electricity absolutely spiked for home heating. So it is becoming an important consideration in terms of needs to be clean, but it also has to be reliable as the world electrifies. I guess the other thing that I was quite astonished to learn about when we started doing a lot of work in this category was how much of the world is still reliant on coal to produce electricity. And sitting in North America, you would think, well, we don't use coal anymore. That's something we used 100 years ago when we were driving around in horse and buggies. Well, surprise, surprise, in the United States, 19% of all energy production is still from coal. It's astonishing. If you think about China, its population and its incredible push to urbanization, 10 years ago it was using 70% coal to produce its electricity. It's now down to 57%, and this is really why they're leading the world in terms of the build-out of the nuclear, additional nuclear capabilities, because they want that number from coal to keep going down. So these are very important themes that we're hearing from investors. The last theme I would share with you is the theme of ESG. And I was a bit surprised by this, but many investors have said to me, we view this as a low carbon way to produce energy, and we think it fits within an ESG framework, which I had not really thought about up until about a year ago, given the growing importance of ESG. Why don't we move to the next slide? I'll talk a little bit about the Sprott Physical Uranium Trust. It has a long history, not this particular trust, but the predecessor vehicle that we acquired in July. So way back in 2005, there was a company called Uranium Participation Corp. It traded on the Toronto Stock Exchange, and it was the world's first physical uranium holding company. We acquired that on July 19th of 2021, and we reorganized the company into a more traditional investment trust. So it is a closed-end fund that trades on the Toronto Stock Exchange in US dollars, Canadian dollars, and it does trade OTC on the pink sheets, ticker SRUUF. The fund right now is over $1 billion in size. It holds over 25 million pounds of uranium, and this is the largest physical uranium fund in the world. So it has attracted a lot of investor interest since we made the announcement back in late April that we were doing this conversion. I think investors are attracted to the size of the fund. It obviously attracts a lot of institutional interest. And I think we've also had a lot of experience running different commodity funds with gold, silver, platinum, palladium, and I think that a lot of these investors are equally as interested in uranium, we've discovered. Why don't we just move to the next page, please? So as I said, it trades on exchange. It's very liquid. The trading volume on the fund in the last few days has been staggering as more and more investors are becoming interested in the fund. And we have a unique mechanism to raise new capital in the fund. It's called an at-the-market program. And this essentially allows a closed-end fund to issue new shares when it can do so on an accretive basis to net asset value. So that's a very interesting twist on closed-end funds, which historically have not been able to issue new shares. We've raised about $240 million through this mechanism in the last month. So we have had very good investor interest. And I would say the interest we're getting is global and across every investor segment. One of the key enhancements we made with the trust when we did the reorganization is we're now providing daily reporting of our net asset value and holdings. So investors can see how many pounds of uranium we own, how many we bought that day, what the net asset value per share is, and what the premium or discount to net asset value is. And this transparency, I think, has been very well received because the prior vehicle only provided this information once per month. And then lastly, the fees we believe are very competitive with a 35 basis point management fee. And then, of course, operating expenses include the storage of the uranium and whatnot. You might ask, where does all this uranium, where do we store it? We store it at 3 different facilities, one in Canada, one in the United States, and one in France. These are conversion facilities. It is stored in metal drums, and it essentially looks like yellow powder, which is why it also goes by the name of yellow cake. Why don't we go to the next? slide. So speaking of yellow cake, there it is on the slide. I'm not going to get into the cycle of this, and because it's probably more for Per. But essentially, what we hold, as I said, is this yellow powder in drums that begins its journey through the conversion process and then ends up being turned into nuclear fuel pellets for reactors. Just moving to the next slide, please. So how much does the fund hold? Well, right now we own a little over 25 million pounds of the stuff, which is, I still shake my head at how much that is. And just to give you some sense of, what is the equivalent energy that we can produce if we converted it all into pellets? If you think about a country like France that has one of the highest percentage of electricity produced by nuclear, and that's 70%, that's enough uranium to run all of their power plants for about 1 year's time. So it does sound like a mind-boggling amount of material, but as Per said earlier, the industry goes through well over 150 million pounds of uranium a year just to keep all of those plants operating. So it is a very important commodity, and it's obviously a commodity that can't be substituted or thrifted like sometimes happens with other commodities. So it is a very important commodity, and it represents a very small part of the overall cost of operating a nuclear fuel reactor facility.
Well, thank you, John. And like Per, John, you're going to be available. So with that, what I'd like to do now is turn it over to Natalie to read her part before we go into the Q&A. And I've got some valuable questions that I want to read off that came in at time of signing up for the webcast, as well as our questions that have been coming in during the webcast. So I'll turn it back to you, Natalie, first, and then we'll go into the Q&A.
Great, and thank you all for such an informative presentation. Just as a reminder, additional material can be found in the documents folder at the bottom of your screen. We appreciate your feedback. Please take a moment to fill out our brief survey, also located at the bottom of your screen. Our speakers will be taking advisor questions. Please type your questions in the box to the right of the slides, and we'll get to as many of your questions as possible. In the event your question is not answered on today's event, a member of the Sprott Asset Management team will reach out to you directly. And if you'd like to have a conversation to further discuss the ideas that were covered during today's event, please click the one-on-one folder at the bottom of your screen and confirm the request. So with that, I'll turn it back over to Ed for our first question.
Thank you, Natalie. And what I'll do just for ease of our listeners is I'll direct who this question should go to just for clarity. But Per, I think we'll start with you because this first question, I think, really speaks to what the market's been doing, particularly in the last month or so. And the question is this: can you please add some color on the depth of the spot market in uranium before and after Sprott entered the market? And part two of that question is, where have those pounds come from in which we've purchased uranium for Sprott?
Yeah, thanks, Ed. In the last month, absolutely, things certainly have changed. We bought in total about 6 million pounds. While these volumes are not unprecedented, it certainly has had an impact on available supply in the spot market, and I think the recent increase in spot price is a clear indication of that. So a game changer certainly is the ATM function. That it's not as chunky when a fund goes in and try to buy 2 million pounds at once and need to lock up a fixed price while they try to go out and find investors for it. It more allows us to have a little bit of a consistent presence in the market, if you will, and we're still finding material. It's not a problem to that. We have to look a little harder, absolutely, but it's still possible to find, but it's not as a wash. So surely the market is tightening, and the price is a clear indication of that, I think. As far as sources where we find it, I won't comment on it specifically, other than it's been a pretty standard mix of what you expect to find as far as what the commercial inventories with traders, suppliers as well. So it's pretty expected where we've seen it so far. And of course now when we're getting into new price levels, it may some sellers might not be there anymore, and others may emerge. But it's definitely a changing landscape, no doubt.
Thank you, Per. And John, this is probably a good one for you. I'm sure you've been getting bombarded with this question as well, whether it's from a sales standpoint or an operations standpoint. But I know everyone on our sales desk has certainly gotten this question, and that is, currently, you can't buy it through the New York Stock Exchange, and the number one question we seem to get is, when is the U.S. ticker coming out? And then I guess part two of that question is, what do you think, in your opinion, will happen when there is no spot available to buy? And maybe Per can address that part. But let's go with the U.S. ticker first. What are our thoughts on that? What are we thinking on that? What's the reality of that potentially happening down the road?
Sure. Okay, great question. We get asked all the time. And when we made our proposal to the UPC board many months ago, one of the items of consideration that we put forward was a pledge to pursue a U.S. listing. All of our trusts today, with the exception of the Uranium Trust, are duly listed on New York and Toronto, and we would absolutely love to tap into that market. Now, what's the process to do that? We have to go through a regulatory review process with the SEC, obviously, and we really don't know how long that will take or what we're going to encounter through the process, because, to our knowledge, nobody has taken a filing for a uranium stockpiling fund to final completion through the SEC process. So we believe we'll be the first, and given we'll be the first, it'll be a novel process. And given the education that we think we're going to have to go through with the SEC to make sure that they're comfortable on how the trust works, and make sure that we have a very good, robust disclosure for investors, and that will take time. So we're not giving anybody an estimate, but it's something that we will be starting the process in the next few weeks, and we hope to have some outcome determined in the first half of next year. On the second part about the spot material, one of the things that's very challenging about the uranium market as we've gotten more and more involved is it is not the most transparent market in terms of how it operates. It's still an OTC market, and I think a lot of market participants have complained that it's not the most transparent, and price discovery is lacking. And I think one of the things that a lot of investors are expecting from the trust is it playing a greater role in that price discovery process by essentially being a more active participant in the spot market. And that's exactly what the trust has done so far over the last 4 weeks or so. We've been buying uranium, and interestingly, I just did a quick calculation that we've bought uranium in 18 out of the last 20 trading days. So we've been active there, and that's part of the price discovery process, is having real transactions occur, so that all participants can see exactly where people are willing to make a market. And the reality is that there is a price for each party where they will let go of their material to another party. And we don't know what that is. We don't speculate on the price of uranium. We just stockpile it. If investors give us capital, we don't make a market timing call. We just put it to work. And that's really the purpose of the vehicle. It's to stack uranium. It's not a trading company. It will not make some grand call that the price of uranium is now X and we should sell it all. No, that's not the purpose of the trust. The purpose of the trust is to operate in perpetuity and to basically provide greater scale and greater liquidity over time to investors.
Thank you, John. And this may go back to Per, because this sort of dovetails what you just mentioned about price discovery. Per, from a utility standpoint, the question is this: when do you believe utilities will start long-term contracting, and at what price per pound in U.S. dollars? And the second part of that question would be, how much more new annual production could be brought back online at anywhere from $50, $60, $70, or even $80 a pound? And where would those amounts come from? So let's start with the first one. When do you believe utilities will start doing long-term contracting, and at what price would you expect to see that happen?
I would say, I mean, utilities haven't been sitting on their hands. They are active. They are in constant discussions with suppliers. So of course that could ebb and flow, but there's by no means that utilities just sit on their hands for a few years at a time. So yeah, I mean, I've seen things in social media. It's like, oh, utilities are getting squeezed by the uranium market. I think people need to give utility buyers a little bit more credit than that. They know exactly what they're doing. Sure, you can time the market right or wrong, but they worked with a much longer time horizon. So I'm not worried that any utility is going to run out of material to run the reactors. But of course, I mean, the COVID situation has caused people to work from home, and that might have pushed out some of the procurement processes a little bit, because obviously, like, you tend to meet in person when you have these bilateral discussions with suppliers, and also some utilities might have financial difficulties if customers can't pay their bills, essentially, and both on industrial and private individual levels. So there can be a range of factors in having sort of made utilities change their buying activities a little bit. I don't know if any utility is scared into action by this either. So far, the price is obviously spiking up a bit, but until it's sustained, I think utilities, they have a little bit of inventory, so they're probably just sitting and watching this a little bit and see what's actually going to happen. And that sort of dovetails a little bit into the second part of the questions, in when do you suppliers start turning their minds back on. And it's very much the same there. Like, if you see, and I've been listening to Cameco's investor calls as well, and they do a very good job in communicating this, that a spike in the spot price is not going to cause them to turn the McArthur River back on. They need to have a sustained price. They need to see contract prices reflect a new level that motivates having their mine on. So, I mean, absolutely, it's exciting to see what the uranium price is doing in such short time, but until we're seeing a sustained level, a sustained interest, then that's when you will start seeing behavior change from the sort of the longer term actors in this market. But it certainly is an exciting time, absolutely. But it's more of a wait and see at this point, and see if this really has legs. And I think it does. But it's still the next month or so will show.
Thank you. And I think we have time for one or two more questions as we're getting close to the top of the hour. I'll shift gears back to John for one, and then we'll come back to you, Per, for one more, which I think is a pretty good question here, which I'll address. But this is one that, we spent obviously this last hour talking about the physical side of the market, of uranium itself. But one of the questions that came in, which, maybe it's premature to think about this, but what about the miners? If you think about Sprott as a firm, we have physical trusts that give you exposure to physical metal. We have mutual funds that give you exposure, and ETFs give you exposure to the miners themselves. What about specifically miners within the uranium market in general? Is that market large enough to even think about? John, maybe you could give us a little bit of color on that. What is the appetite there? Are we seeing anything? Are you getting questions about that currently today?
Sure. Well, I think it's fair to say that with the pop that we've seen in the price of the commodity, the uranium miners and developers have had a much more significant increase, which you would expect it would, given the operating leverage of a mining company. So the uranium equities have had dramatic gains over the last 12 months. Clearly, these equities are reflecting a much higher spot price of uranium than where we are right now, which is around $44-ish a pound. So I think investors need to keep that in mind, that these stocks have valuations right now that do reflect a much higher price. I think the second thing is if for an existing producer, you have to think also about how much of their production has been already sold at lower prices. So you may not get the gain that you think in terms of from higher prices in terms of their revenue and bottom line. And then for more of the junior companies, exploration and development companies that are pre-production, those companies are obviously rallying on the back of the expectation that this higher uranium price increases the probability that they will one day become an operating mine. And that sometimes happens and sometimes it does not. So these are all different considerations that that people need to think about equity risk, because at the end of the day, even commodity companies have a certain level of equity risk inherent in them. There's operating risk, there's geopolitical risk, versus the spot commodity price, which tends to be less volatile than the valuations of the equities themselves.
Thank you for that. Yeah, I like to always tell investors when we talk about the equities versus physical is, particularly if you're new to this allocation, start with the physical first, get comfortable with the trade, get comfortable with the environment, think about that first, and then as that comfort level increases, you can think about the equities more as an opportunistic type of allocation. So I think you bring up some good points there. But John, thank you for that. And Per, let's go back to you for one. I know we have a slide somewhere that talks about this as well. I think we touched on it briefly, but I'm looking at the questions coming in, which we have 76 questions right now, but this question is probably one of the more common ones, which is, can you walk us through the overall life cycle? So the question is this: please walk us through the typical life of uranium from mining to refining all the way to usage and disposal. I mean, we could probably do an entire call on that itself, but if you could spend a few minutes sort of walking an investor through that cycle, and I believe it's on page 24 of the slide deck. Yeah, thank you. We can look at that, but if you could walk them through the cycle and what that looks like, I think that would be useful. And then any other questions we did not get to today, we'll certainly be reaching out to via email and our phone calls in the coming days. So Per, walk us through the cycle and we'll wrap it up with that.
All right, thank you very much, Ed. I think people can see the slide here, and then I apologize in advance to any Canadian listeners for not showing the CANDU technology, which is a great technology, but this focuses on light water reactors, which is mostly used around the world. So obviously it starts with exploration. You got to find the uranium somewhere, you get it out of the ground, and you mill it. So you can crush the ore or you can leach it out, depending on what type of mine it is. And then then you get the shape of U3O8, which is the initial stage, if you will, of the front end of the fuel cycle. There is a step called refining, where you just purify it a little bit before you send it into conversion to UF6, and this is where it goes from a powder form into a gas form. And the reason you turn into a gas is for the next step called enrichment, where this is probably what people might be familiar with, but it's obviously the uranium isotope U-235, which is the interesting one from a fission perspective. The majority of uranium, naturally occurring uranium, is uranium-238. So in order for it to be able to use in a light water reactor, you need to enrich it, which means increase the portion of the 235 isotope to about 3 to 5%, and that happens in the enrichment phase. After that, you deconvert it, if you will, turn it back into uranium oxide. And so that's the UO2 form. That's what's used to press into a pellet, then is put into a fuel element. Then you burn it in the reactor, and then the countries can go different ways on this. Most countries do a once through, which means that you use it once in the reactor, and then you store it. It's called spent fuel, and you put it in storage. Or there is another alternative when you reprocess it, which is used in France and other countries, England and other countries, Russia for sure, where you basically make new fuel out of the used fuel. Now it's a pretty expensive and quite difficult process because of the radioactivity involved. But it's certainly, some countries have chosen to do so. The United States does not, for example. Obviously, they have a military aspect of things where that's done, but it's not on the civil side of things. So that's the essential fuel cycle. On the other side, Ed, we can spend a lot of time on this. I'll be more than happy to do another call on it. But the decision the SPUT has made is to keep it in the most liquid form. And that is the U3O8, is the liquid that's traded, because the further up the chain you move, the more specialized and the less liquid the product is going to be. So it's the initial stage. There's no radioactivity involved other than basically some minor radon issues, but it's not really radioactive until you have put it into the reactor. So it's fairly harmless. It's stored at these facilities around the world that John mentioned earlier. So yeah, yellow cake U3O8, that's what the focus is, and it's by far the most liquid form that's traded.
Thank you for that, and thank you all today for joining us for the last hour plus on uranium. We look forward to having further conversations with everyone on this call. You can certainly download the presentation deck. For those that want to share it with others, we will be distributing a recorded version of this in the coming days, and we encourage you to reach out to us. We would love to have further conversations with you, whether it's regarding uranium or other unique physical trust or equities that we offer within the precious metals and real asset space. So thanks again for your time and interest today, and we hope to be speaking with all of you down the road. Thank you.